Well, Neil, you've often been talking about the importance that so many people place, particularly the Desi community, on gold and the price of gold. And gold prices have dropped 1 dirham per gram in Dubai in early trade. Spot gold was 0.15% down to 1,760.95 cents per ounce as of 9:10 this morning.
That's right. I mean, see, for us Desis, it's an age-old concept that gold is the best investment. Buy gold, keep it, and generally people would do that. In the days bygone, people would do that so that it would be helpful when there were marriages or weddings in the house, or you want to do some giftings for your son's, your daughter's wedding. Gold would always come to use. Also, people were not, at that point in time, were not completely educated on how to invest in stock market, or probably even before stock markets even started. So the only safest investment was gold. You buy gold, dig it under your house somewhere in your backyard, and then keep it safe over there. But that stayed true. Even today, people love investing in gold. It's one of the most safest, to say so, in the long-term investment patterns.
Well, for more details, his friend of the show, Sandeep Jadwani, the head of investment advisory at Habib Investment. Sandeep, thank you very much for joining us. What has caused the price of gold to fall by 1 dirham per gram?
Hi, Kitch. Welcome back, firstly. And Neil,
thank you.
Hi to you as well.
Hello.
So it's always good to be on the show and educate your audience on what happens in the investment markets. Now, gold, if we see today, is at, on the dollar terms, it's at $1764.54 per ounce. Okay. And this has really gone up substantially in the last 1 week's time. Mm-hmm. Okay. The reason for this is typically a lot of things happening where price of the gold is driven by the strength of the US dollar, and the strength of the US dollar is driven by the interest rate on US dollar. So the inflation numbers that came out last week were at 7.7%, much below expectation, and hints that that got the markets to think that the Feds may not increase the interest rates, because the interest rates, or the anticipated interest rate increase, is slower than what was planned earlier. US dollar typically weakened from where it was, and because of the weakness in the US dollar, gold prices went up. Gold prices also went up because we saw a lot of things happening in the crypto market. Biggest failures in the crypto of FTX, and how it's not compared to gold, not store of value. So that really got a lot of people investing in gold towards a safer haven. And when we saw the gold price drop today, that was just a slight consolidation, that probably it would have risen too high in the last 1 week, and a dirham today, which translates to about 30 cents, has gone down.
Right. So more of a correction, and not like a thing that one has to try and withdraw and break all their FDs to invest in gold. If I'm right.
No, today even FDs are giving you a 4% return over the year, which last year they were giving 0. And hence people would enter into places. And if you see, because last year even gold was very flattish, so to say. Let's say from Jan 2021, where gold was at about $1,875 an ounce, until today, where it was $1,750 an ounce.
Right.
So you've seen almost flattish performance on gold itself.
So Sandeep, normally we've seen this trend that whenever people go back to India after quite some time, they especially residents here, they take some serious amount of gold and go back home. Is that wise? Is that sensible? Is that something that you need to do, that you buy gold chains and gold ornaments and take them, or is it sensible to take gold bonds and as an instrument of investment?
So if at all you would want to enjoy your gold in the family, you would take gold jewelry, because the making in UAE, the quality and the finesse with the making is much better compared to India, at least what I know of. And the purity of gold is also slightly credible here compared to back home. So just the quality and all, but if at all you're taking gold as your investment, as your safe haven, as your amount that you can utilize for any unforeseen instances, it's better to take gold bonds, because then you save up on your making charges, you save up on your custom duty, you save up on the fear of theft and erosion. So
Makes
you
sense.
save up on so much of your costs, right? So
That is
gold,
true.
you still get exposed to pure gold on 24 karat instead of 22 or 21 or 18, which typically will lose value.
No, that is true. Now, also something that we've seen, you mentioned about the FD rates also coming up high. Also, thanks to the the Fed Reserves ensuring that they keep pumping up the numbers to balance out what we've seen of making us inflation ready. Do we see a drop in that in the coming times? Again, as far as corrections are concerned.
So there will certainly be consolidation in the interest rates by end of 2023. So the market still anticipate say about another 1 percentage point from here on across 2023, and then a plateau out on interest rates, and then eventually, based on where the governments decide to have their growth trajectory to bring in the growth back, interest rates could go down. Because that will spear up the economy with money, liquidity, so that growth plans can be taken ahead.
Also, when you look at the Indian rupee, it's certainly volatile, dropping against the UAE dirham. And we know that it dropped against the US dollar in the early trade on Monday, where the dirham is pegged to the US dollar. I mean, how do you see this positioning? Because we've seen many currencies drop against the US dollar. What do you forecast? Is the slide going to continue, or do you think that some of the measures that have been taken by the Fed Reserve are going to curb the drop by many currencies?
So stronger US dollar or a stronger dirham is not good for economies, because as the emerging market economies move into their growth cycle, to ensure that their GDPs remain above their forecasting, their currency need to be competitive, not weak, not strong, to ensure that there is a push in their exports. Okay, but at the same time, these are net importers of oil. Oil is driven in US dollar mostly. And if US dollar is expensive or strong, just like the way we had it starting of the month, it was very difficult for these economies to sustain. What is now happening is they are faced with double whammy of weak home currency and higher prices of oil. Oil is also around at $90 per barrel and above. So, but if you see the charts today and in the last 1 week of November, there has been, at least until Friday, there has been good strength coming in non-US dollar currencies. But today, again, it's the same thing that happened with gold. Compared to the last closing, which was Friday, okay, things have, whether it's gold or it is the currency, they've settled down. The dust has settled down. Okay, and today, as we speak, live rates of 22.1 rupee to the dirham is what it's quoting as on 14th November. So it's fair. It's 1 day movement. I don't think so. It should be a worrisome for anyone, because it's not even it's not even a huge movement as such.
Now, one last question, Sandeep, and I ask this not just for, me, for our listeners, for everyone who, has a little bit of thought towards investment. And that is that in a market like this, where interest rates are high, where we've seen that a lot of people, when there was COVID times, were holding on to cash dear, like they kept cash in their banks, or they kept cash onto themselves. They were not investing at all. And now the banks have said, listen, give us your money, we will give you good interest rates. People have probably gone towards that trend. What does the trend suggest, and where does one park or push their money aggressively? Is it the stocks? Is it the mutual funds midsection, or just keep it in your banks and stay happy for the next quarter and a half?
So when we speak of investments, I think every individual needs to have their own investment strategy based on what amount they need and when.
Right.
So on a quarter-on-quarter basis, if you are holding 100 dirhams, I would typically suggest that put 80 or 75 to 80% as cash deposits short-term quarter-on-quarter, and start deploying the balance 25% into the markets and grow that pot. until you see stability and you see more certain returns coming out. Because once the interest rates stabilize, the markets, stock markets will stabilize as well in terms of their returns. Okay. So you can anticipate at least if the economies are growing by 8%, okay, which will give you 6+%, which is still touching your 8% or 7.7%, which is the inflation. Okay, global average inflation.
Right.
And your money needs to make at least a 7% return for you to beat inflation.
Makes
and
sense.
That will not come from one asset class, but a diversified asset class over a period of time. It's not a quarter-on-quarter or a daily trade or anything of that sort. Because people have their day jobs and they can't be sitting in front of the stock market screens and trading every day like they did when they were locked down.
True. I mean, lockdown, a lot of people actually got into this. Be it in crypto, day trading in crypto, day trading in stocks. Because, well, I mean, didn't really have too much to do. Right, you were in front of the computer screen, sitting and trying to see if I can, make a quick buck through a day trade. But I mean, and that's precisely why my question was, now should we focus on the long-term strategies to ensure that the money is making money?
So staying in the market and not trying to time it is something that everyone should go in if investing is not their core way of making money.
Right.
Okay, if they have jobs, if they have businesses to run, they would rather concentrate on that and create multiple income streams through long-term investments with a 8 to 10% dividend yield, income yields, growth yields coming out.
Right. No, this is fantastic. I'm glad that you gave this thought. I'm sure that our listeners will try and make some amount of thought towards what you have mentioned over here, because like you mentioned, financial investments is an absolute individual thing. What works for me may not work for you. What I trust may not be trusted by Kitch. So it's purely something that every individual thinks differently, works differently. But an overview from you definitely helps.
And one thing I'll tell to all your listeners, to you, to everyone, is that please do not. There is no one investment right for all.
Yeah.
Okay. So it's very important that you invest only in things that you understand. Okay, like Neil, you could understand crypto very well, and I may not.
Right.
So if you'll tell me to invest in a crypto, I will just invest blindfolded, but I will not know when to exit, when to book profit.
True.
Yeah, and
I could lose entire money.
And certainly, Sandeep, and if Neil wants to invest in things he knows, I think that Nutella and Jim Jam treats, if there's an opportunity to invest in those.
I would be investing in the stocks of Britannia in that case.
Yeah, definitely. No, we end on a fun point, but it's been great information and hearing your thoughts. Sandeep Jadwani, the Head of Investment Advisory from Habib Investment, thank you very much for sharing your insights on TSP.